You see the headlines, right? The daily price of silver goes up, it goes down. But what if I told you that's all just noise? That the real story, the one that could actually reshape the markets, is happening completely out of sight?
Yeah, silver's price is on the move, and sure, that's got everyone talking. But the truth, well, the truth is almost always hidden behind the numbers. We're about to peel back the layers and look at what's really driving this, because it's so much bigger than just a daily price chart.
So on the surface, this is what you see. A nice 4.3% jump in one day. Looks good, right? But this number, honestly, it's a distraction, and it's exactly where most people just stop looking.
And that, right there, would be a huge mistake. Because what's bubbling up underneath, that's the real story. It's a tale of physical scarcity, of huge strategic moves on a global scale. The real game isn't on the ticker tape. It's being played in the vaults.
And here's your proof. Check this out. 3.4 million ounces of physical silver just pulled from the COMEX vaults in one single day. We're not talking about paper contracts here. We're talking about someone showing up and saying, "Give me the actual metal." This is our first major clue that the ground is shifting right under the market's feet.
Okay, so who's making these big moves? To answer that, we've got to look east, because China just did something that analysts are calling a war on paper silver. And to get why this is such a big deal, you need to understand one crucial distinction.
Think of it like this. On one hand, you have paper silver. It's basically IOUs, futures contracts, all these financial promises of silver. But on the other hand, you've got the real deal, the physical, tangible metal bar. For decades, that paper market has been calling the shots on price. But what happens when there isn't enough real metal to back up all those paper promises?
Well, this is Shanghai's answer to that exact question. The Shanghai Futures Exchange just flipped the script. They changed their rules to basically kick out speculative paper traders right before they can demand delivery. Now, here's the key takeaway. They are protecting their own domestic industries, prioritizing them over speculators, all to get their hands on the physical metal they so desperately need. This isn't an attack, it's a defense.
And here's why they're so desperate. Look at this number. Their registered silver stockpiles have absolutely collapsed, down a staggering 88% from their peak in 2021. They're running on fumes. So this move, it's not some grand strategic play. It's born out of pure necessity.
But hold on. This isn't just a story about China. This frantic scramble for the real stuff, it's a global phenomenon. We're seeing the exact same pattern emerge right in the heart of the Western financial system. Their vaults are emptying out too. I mean, the numbers don't lie. It looks like a coordinated drain. You've got millions of ounces yanked from JP Morgan, over 900,000 from CNGT, another 300,000 from HSBC, all in a single day. And because of this, the total registered silver on the COMEX just dropped below 90 million ounces for the very first time. The physical supply is getting squeezed hard from all sides.
So that brings us to the big question, right? Why now? What's with this sudden global panic to grab tangible assets? Well, this silver squeeze isn't happening in a vacuum. Nope, it's actually happening right in the middle of a perfect storm of global instability.
First up, just look at the money situation. The CBO is projecting the U.S. national debt is going to hit, wait for it, $64 trillion in the next 10 years. That's a mind-boggling number. The interest payments alone are about to cross $1 trillion a year. When you see numbers like that, confidence in paper currency starts to get a little shaky.
And at the exact same time, check out this chart from the IMF. It basically shows that we are living in the most uncertain time in recorded history. This index is tracking the word uncertainty in economic reports, and right now, it's nearly double the peak of the COVID crisis. It makes the 2008 financial crisis look small. And when uncertainty is this high, where does money run? It runs for safety.
And if that wasn't enough, let's throw in some escalating geopolitical conflict. With tensions rising with Iran, crude oil just jumped over 4%. A real conflict there could threaten a fifth of the world's oil supply. Imagine that shockwave hitting a global economy that's already walking on a tightrope.
Yeah, if you're finding this deep dive valuable and you want to keep getting ahead of the headlines, please do us a favor and like, share, and subscribe. That way, you're not going to miss what our data turns up next.
Okay, so let's recap. We have a physical supply squeeze, debt that's spiraling out of control, and record global uncertainty. This is the moment where we have to stop and ask, what is all this data really telling us? Because in every crisis, there's always a warning, but sometimes there's also a hidden opportunity.
But this next part is maybe the most stunning piece of the entire puzzle.
After everything we've just talked about, the squeeze, the debt, the chaos, what percentage of global wealth do you think is actually allocated to silver? Just 0.03%. That's not even a rounding error. It's almost completely ignored by mainstream money.
And to put that into perspective, back in the last big bull market for silver in 2011, that allocation was double what it is today. So think about that. As all the fundamental reasons to own a real physical asset get stronger and stronger, the mainstream allocation is actually getting smaller. It's completely counterintuitive.
And this is what led one market analyst to sum it up perfectly. He said, "That's not a bubble. That's neglect. This isn't a crowded trade. It's the opposite. It's an asset that's been almost completely forgotten."
So that leaves us right here with one final thought. We're seeing this mad dash for physical metal. We're seeing historic levels of debt and uncertainty. And yet, the asset that has been a safe haven for centuries is almost completely overlooked. When all the signals are pointing to a storm on the horizon, the question you have to ask yourself is, what do you see? A crisis or a once-in-a-generation opportunity?